Hey guys, I hope you people are doing well. First of all, a bit of apologies that you people had to wait a bit. But anyways, we are just going to start off. Um, the agenda for the session is that I will be doing the examination questions. This is what my plan is, that I would be doing the maximum examination questions with you people so that you people have an idea that how do we actually go about doing the exam questions. What is the approach that we should adopt in order to do these exam questions? That's what I'm going to do. So let's just start off and let's just start discussing. Just a second. Okay, so let's just start discussing. We're going to talk about this advanced performance management. What I've done is that the ACCA CB practice platform, unfortunately, is causing a lot of issues, due to which I'm not able to take the risk of going through the ACCA practice platform. So what I will be doing is that I will be using this. I'll be using this revision kit to do the questions, because ultimately, with respect to APM, there's not much of a change in the questions. So I'll be using the revision kit so that we are able to have a smooth access to the class. So here is the revision kit in front of you. There are different questions of different attempts. Obviously, the latest examination questions are not here, but all these questions have been amended and are suited to the current scenario of the current. They are all suited to how the syllabus is right now. So what I'm actually going to do is that I'm going to start off with this question, the name of which is Lupton Industries. So I will actually be going to page number 48. The question was the Lupton Industries. That's what I'm actually going to be starting off with right now. And what I'll be doing is that as soon as we go about discussing the questions, as soon as whatever the topics that come into the question, I'll just keep on explaining those areas to you. And then we'll start discussing those, and we'll try to draft the answer, that how exactly do you draft the answer to the question. Okay, so it's actually about Lupton Industries, the question number 17 of the revision kit. Let's just start discussing about this Lupton Industries. So whenever we are dealing with a question, obviously now you know that there are professional marks also. And with respect to question number 1 of the examination, there are 10 professional marks that you would come across. So what I'll just do is that I will go about discussing this and will take you people through. So first of all, with respect to Lupton Industries, it says that, just a second, just a second, please. Okay, with respect to the Lupton Industries, what's actually happening is that it says that Lupton Industries, the company information, market, and the products. This is the detail that I have given to you. Plus, what is happening is that they have actually given to you the requirements of the question, and the requirement of the question are these. It says write a report, write a report, write a report to the board of Lupton Industries responding to the request for the following. What are the following? Calculation of the suggested KPIs. So there are KPIs which have been suggested. So you've got to respond to that. The pest analysis to identify issues and effectiveness of the suggested KPIs. How the suggested KPIs fit to the CSF given. The extent to which the suggested KPIs will be suitable for use in planning rather than controlling. And the 2 proposed marketing strategies. Just ignore the professional marks area here, because nowadays the professional marks are 10 marks in question number 1. But again, the question is still very much relevant and we would go through it. So I would suggest that the approach to do the question is just read the top paragraph first so that you have an idea what's going on. So if you could just take 2 minutes, try to read this top paragraph. Okay, let's just start off. It says Lopton Industries is one of the largest listed consumer durables manufacturers in the world, making machines, tumble dryers, and dishwashers. It has recently expanded into B land, which is a developing country. So B land is a developing country where incomes have risen to the point where demand is increasing for Lupton's goods among the growing middle class population. So the income levels are rising in B land, and due to which the demand is increasing for the product. Lupton believes in the economies of a scale of large manufacturing sites with dispersed selling branches in the markets in which it operates. So the Lupton's viewpoint is economies of scale. Therefore, it has entered the B land market by setting up the local sales force and supporting them with a national marketing campaign. So there is a local sales force and the nationwide marketing campaign is there. Company is currently only selling two products in Beeland. Both are different types of washing machines. A basic product called Cheerful with functions which are comparable with the existing local competitors' output, and a premium product called Posh, which has functions and features similar to Lupton's products in other developed countries. Both products are manufactured and imported from its regional manufacturing hub, which is in the neighboring country of Kayland. So the products are imported and manufactured and imported from its regional manufacturing hub, which is in the neighboring country of Kayland. So Lupton, what are they up to? They're actually operating in B-land now, which is a developing country. The income of the middle class population is increasing. And what is actually happening is that the Lupton, what it has done is, it has actually developed two types of product. One of them is called basic product and the other one of them is called premium product. The basic product is similar to what is there in the industry and the premium product is a bit different, right? Now, competitive environment in B-land. If you could read through this, please, quickly. Okay, now it says the competitive environment in B-land is changing rapidly. The washing machine market used to be dominated by two large local manufacturers who make simple, cheap, and reliable machines. There are two other major international. So what are there? There are two large local manufacturers. There are two other major international. There are two other major internationals manufacturers apart from Lopton. One of these has already opened a factory in Beeline and is producing machines similar to Cheerful. To compete directly with existing local producers, the government of Beeline has supported this new entrant with grants, as it is keen to encourage inward investment by foreign companies. And the resulting expertise and employment which they provide, the other international competitor is now considering entering the Beeline market with more highly specified machines similar to Lupton's Posh brand. Now the mission statement and the critical success factor. So you understand what's the competitive environment. They've given you details about competitive environment, that the local manufacturers are very big. The international investor, one of them is now setting up a factory, a manufacturing plant. And the second thing is that the other competitor is thinking of bringing a product similar to your Posh products. Now, can you just go through the mission statement and the CSF and the KPIs? Okay, let's just start off. Now see, it says mission statement of Lopton is that to be the most successful, manufacturer of its type of products in the world. The board sets the following critical success factors for Lopton's Beeline performance operations: to obtain a dominant market presence, to maximize profits with acceptable risk, to maintain the brand image of Lopton for above average quality products. So there are multiple things in the mission statement. It says the board is considering using the following KPIs for each product: the total profit, the average sales per unit, the contribution per unit, market share, margin of safety, return on capital employed, total quality cost, and so and so. The margin of safety has been defined as so and so, so and so. So that's what they are trying to do. Then it talks about the performance measurement system. It says the board has asked you as a consultant to assess its current performance measurement systems and want to prepare a report covering a number of different areas. First, board want you to calculate the KPIs suggested by them for the reassessment of the performance of B-land operations. Second, you should use pest analysis to identify issues in company's external environment and then evaluate the effectiveness of the suggested KPIs in addressing these issues. Thirdly, you should take each CSF in turn and evaluate how suggested KPIs fit into the CSF given. Fourth, you should rather assess the extent to which suggested KPIs would be suitable for use in planning rather than controlling activities. So basically, whatever the questions requirement are, what the board has done is that the examiner, he has actually explained to you all the requirements in the question itself. The data given in Appendix 1 on B-Land's operation for the most recent financial year has been collated. Collated means gathered for your use with these 4 tasks. Now, this is the data that's given, and let's understand the requirement of the question. It says calculation of the suggested KPIs. Now, first of all, let me just write down the KPIs, that what exactly are the KPIs that he has suggested. So let's talk about those KPIs. The KPIs that he has suggested are, this is the Lupton Industries. I hope that this is visible to you all. Or if you want, I can just zoom in a bit more. So this is Lupton Industries. Total profit is something that you have to calculate. Second thing is average sales price per unit. Contribution per unit. Market share. Screen not clear, is still not clear? Okay, wait a bit. Maybe it would be a bit more clear now. Is it a bit more clearer now? Okay, so market share. Then you have got margin of safety. Then he has got return on capital employed. Furthermore, you have got total quality cost, number of consumer awards won. Now see, so what actually happens is that we have got these things, which is total profit, average sales per unit, whatsoever that is. Now you know how to calculate total profit, you know. Now contribution, how do we calculate contribution? So sales minus the variable cost, so less the variable cost, you end up getting the contribution. Market share is revenue divided by market, total market revenue. Margin of safety has given you the formula, which is actual sales units. Actual sale units minus break-even sale units. Just a second, please. Just a second. Just a second. Okay, sorry guys. Sorry for a bit of an interference. I'm sorry about it. I hope that the screen is clearer now. Okay. So this is what the return on capital employed is usually the profit before interest and tax divided by capital employed. The total quality costs are gonna be what? The total quality costs are going to be, I mean, they have given the quality cost already and number of consumer awards won. Now, can you people just take a screenshot of these, the ones which are required to be calculated? Can you just take the screenshot of these? Yeah, so these are the ones that you have to calculate. Now I'm just gonna open up this page and will give you 5 minutes, 7 minutes, 10 minutes to just try and do the calculations. Okay, can you give it a try, please? Can you give it a try? I think that it is visible to you people. Can you give it a try? Okay, let's talk. So with respect to cheerful, I mean, just one thing that I want to see is that does he want to do this calculation for every single product or does he want to do it? Board is considering using following KPIs for each product. So you got to do it for each of the product, right? For the cheerful and for the posh. For the cheerful and for posh, you got to use it for both the cheerful and posh. Now let's try to understand this. The first one of them is you have to calculate the total profit per unit, the total profit. So what do you have to do? You have to calculate the total profit. What is the information given? The materials is given, the labor is given, overheads, distribution costs, quality costs, fixed costs, which are administration, distribution, quality costs, marketing, etc. The data, total revenue is given, and then capital employed is given, total market size is given, bill and operations sales given 1.12 million units, and so on and so forth. Now let's just try to do the calculation of the profit for each one of them. So the revenue is given to you people, and the revenue that is given is basically 448 million, 308 million. The variable cost would be like this: materials, labor, overheads, distribution costs, quality costs, fixed costs, administration costs, distribution costs, quality costs, and the marketing costs. Now what next is there? So this is all the cost per different units. So like it's 90, 60, 40, 45, 20, 18, 16, 6, and 80. So resultingly, what's going to happen is that it's going to be per unit, right? These are the costs which are given per unit. Per unit cost. Now, 1.12 million units. Hence, resultingly, what happens is that the total profit is going to be, in fact, the total costs are this. So hence the total profit is going to be this plus this, which is 28 million. Total profit is going to be 28 million. So here we got the profitability for both of the products. So we've been able to calculate the profitability for both of the products. You got 45. 45 for which one, Dave? Which one did you get 45 for? For which one did you get 45? Maybe I might have made some error. $42.5 were cheerful. How did you get it? Okay, just a second. Can you just compare what's going on? So fixed cost is also per unit. Now, how did you get that? I mean, like you see, this is dollar per unit, this is dollar per unit. So the fixed cost, okay, so you're assuming the fixed cost to be not dollars per unit. Is that what you're assuming? Is that what you're assuming? Okay, okay.
Yes.
Thank you. Thank you. My error. Thank you very much. It's an
Okay, because I
error
saw
on
it
my
saying
side. Thank you very much for
millions.
identifying that.
Okay.
So basically, wait a bit. Wait a bit. Variable cost per unit. Okay, and then what you have is that you've got total number of units. Total units. Total variable cost. So this is the variable cost per unit. Now the total number of units are this. The total variable cost is this. Then what happens is that you have got the fixed cost. So the total costs are gonna be this. The total profit is the revenue minus the total cost. Now, so this is what the total answer is. Thank you, Dave, for identifying the error that I was making. Thank you very much for doing that. So this is how you end up getting the total profit. Is that okay to all? Yeah, is that okay to all? Okay, so we have been able to do the calculation of the profit here. Now what next is there? There we have got the next one, which is called the average sales price per unit. What is it? It's called the average sales price per unit. Now when you talk about the average sales price per unit, the average sales price per unit is going to be this revenue divided by total number of units. This revenue divided by total sales per unit. So it's actually going to be 448 divided by number of units. And it's going to be here. So average sales price per unit is this. Now when we talk about the contribution per unit, so how are we going to do average sales price minus the variable cost per unit? Similarly, the average sales price minus the variable cost per unit. Right? Then it says market share. It's revenue divided by total market size. So when we talk about the revenue, it's actually like this. 448 million is your revenue. Total market size in terms of units is this. So unfortunately, we are not being given the market revenue in terms of this. So your market share is going to be unit sales divided by total market size. It's actually going to be like this. 1.12 divided by 9.33. So this is what you have got. You've got the market share. Then you have got margin of safety. How do you get the margin of safety? It's actual sales units minus the break-even units. Now, first of all, you would have to calculate the break-even units. So if you want to calculate the break-even units, the formula is going to be fixed cost divided by contribution per unit. So it is actually going to be like this. This is fixed cost divided by contribution per unit. So it's basically break-even units is 0.82759 million units. Now margin of safety is actually the actual sales units. The actual sales units is 1.12 minus the break-even sales units divided by actual sales units. The return on capital employed is your profit divided by capital employed of 326 million here. It's gonna be profit divided by 250 million here. Then you've got total quality cost. So total quality cost was here per unit from the variable cost. Then there is this further cost. So it's actually going to be 6 million plus bracket open 1.12 multiplied by 20. This is what total quality cost is going to be. And the number of consumer awards won is 1. And so basically, this is how we would be doing the whole calculation of the KPIs in this scenario. We'll be doing the whole calculation of the KPIs in this scenario like this. So the whole calculation of the KPI in this scenario is going to be like this. Let me know if you understand this. Yeah, let me know if you understand this. Yeah, if 4 to 6 marks could be expected, it is not expected that you're gonna get the whole question. But it's a good question for the practice, and the reason I specifically chose for this question is that I know that majority of you people are not good at calculations. So I wanted to do the calculations for that specific reason. Okay, I would try to do them. I would try to do them. Anyways, now let's just come on to the next part of the question, which says that the requirement of the question is that pest analysis to identify the issues and effectiveness of the suggested KPIs in addressing these issues. So now let's just try to see that what do we need to do. First of all, we need to actually, with respect to this Lupton Industries, what we need to do is that we need to do the pest analysis. What do we need to do? We need to do the pest analysis, right? Now, if you got to do the pest analysis, let's try to understand this. Is he asking for pest or is he asking for pesto? He's asking for pest, right? So political, economic, social, technological. Let's just try to read through the question again and let's just try to read out each of the pointers so that we could just create a sort of chart. Our top paragraph, any pointers that you think you have? Okay, very good. Really good to see this. Both products manufactured and imported regional hub. We land developing country with growing middle class. Okay, income is rising and demand also high. Okay, see what is happening over here is that there's an economic factor which is the income for the middle class population is rising. Income for the middle class population is rising. The social trend is that people are demanding the washing machines more due to higher income levels, right? Okay, what else is there? Um, mm, mm. Okay, can we just think about anything from this paragraph? Anything from this paragraph, please? Okay. So basically, what you should understand over here is that it's like low barriers to entry, government encouraging investment, government encouraging investment. There are low barriers to entry, the government encouraging investment, plus offering the grants to the new entities. Okay, technological competitors are launching premium products. Okay. Um, Anything else that you can identify? International competitors with highly specialized machines.
Okay, now one more thing. Can you identify any factors from here? Exchange rates, I mean, like, is it specifically mentioned under the scenario, the exchange rates? Is it specifically mentioned under the scenario, the exchange rates? Anywhere in the scenario that you could find the exchange rate things? Okay, since nobody has come from another country, okay, let's just see that what have we been able to gather, right? It's like political, we know the low barriers to entry, economic, social, people are demanding washing machines, technology. Now, not much other information is given. Maybe we could just, okay, now let's just see what is the questions requirement. He says, best analysis to identify the issues and effectiveness of the suggested KPIs in addressing those issues. Now just remember one thing. Just remember one thing. The KPIs help in a manner that the performance is quantified. Once the performance is quantified, that is, it is measured, the things get done. So if the KPIs are actually addressing the challenges, then it will help overcome those challenges. Like, for example, let me just guide you people a bit. Now let me just guide you. Basically, what happens is that the overall the political situation. You see, if I sum up the issues, there is the government policy is such that it is the government policy is such that it is allowing new entrants into the market easily and is instead offering grants to the entities who are investing in the manufacturing operations. Lupton already has a huge setup in the neighboring country of Kayland, and it may not be possible for them to set up a similar type of plant in the B land, and hence will not be able to avail the grants slash other advantages that the competitors may be able to avail slash afford. Hence, this is going to lead to a reduction in the profit slash market share. The KPIs of what are the KPIs? I would just go on to the Excel sheet. The KPIs of profit is going to suggest how profitable the entity has been in B land, plus the KPI of market share would suggest the extent to which they have been able to penetrate in the market. Do you think any other KPI would be relevant for this political aspect? Yeah, do you people think any other KPI would be relevant for the political aspect? Yeah, do you think any other thing with respect to this? The economic. Okay. This will have a favorable impact on the sales of product like cheerful. But the issue is that the local manufacturers already produce a similar type of product, and hence they will be able to price it better. An appropriate KPI for the economic performance could be market share, average sales price, the average selling price would be able to suggest how the entity is able to sell its product, and this could become comparable with those of the competitor. Furthermore, market share would be able to indicate the extent to which entity has been successful against the competitors in ensuring that their products are sold. What about the social? What could be the KPI? Consumer Awards one? The technology could be quality cost. Even here, we could have actually mentioned the margin of safety also. The technology could also be contribution per unit. That could also be the case. Do you people have any inputs on this, please? Yeah, any inputs? Hello, where are you people lost? Okay, no issues. As long as you're with me, that's okay. Now, how the suggested KPIs fit to the CSFs given? So now what you need to do is that you need to select these KPIs and you have to suggest that how do they meet the CSFs given. So what are the CSFs that are given? The critical success factors that are given is basically obtain dominant market presence, maximize profit with acceptable risk, maintain brand image for above average quality products. Now, I'm giving you 2 minutes. Just let me know which KPI would be suitable for each one of these CSFs, please. Which one of the KPIs would be suitable for each one of these CSFs, please? Okay, so basically the market share over here. What else? Return on capital employed, contribution per unit, the profit, consumer awards one, consumer awards one. What else could be there? Quality cost as a percentage of total cost. Or let's say right now we're just talking about these KPIs, so quality cost. What else could be there? Yeah, what else could be there? Okay, seems like you people are sleeping. Hello. Okay, anyways, now let's just move a bit forward and let's talk further. The extent to which suggested KPI would be suitable for use in planning rather than controlling. Now, let me just talk about this. The planning and the controlling CSS. Basically, just try to understand that what do we mean by this planning and controlling. See, generally what happens is that at times you might actually go into the examination. You would come up with the terminologies, which you would say that I don't understand what is this terminology all about. So how do you go about doing those things is try to see this. Basically, one thing that I would suggest you people to do is that once you come across such a situation, try to think, number one, try to think that what could be a planning KPI? What could be the controlling KPI? So planning KPIs are basically the KPIs that encourage entity to plan ahead, to think about growth and the future plans. Whereas the controlling KPI are the KPIs that would focus more on the control of the entity's performance, like reductions in the cost and the focus on profitability. So in this specific scenario, which one of them are the planning KPI and which one of them are controlling KPI? Yeah, hello? Which ones are the planning KPI, which one are the controlling KPI? Yeah, which one is planning, which one is control? Okay, the margin of safety is about consumer awards one, market share, quality cost. Yeah, quality cost can be both, yes. With respect to the controlling KPIs, the cost per unit, sorry, the contribution per unit, average sales price, Quality cost could be both, you're right. Margin of safety, because that actually helps you understand the risk of the entity. Now, last part of the question is that the two proposed marketing strategies. Now, let's just try to see what is he talking about the marketing strategy. Can you just go through this? And can you see what is he asking? Okay, it says finally board is considering two new marketing strategies going forward. Plan A is to continue operations at present, allowing for a 4% growth in volumes per annum for both Cheerful and Bosch. Plan B is to dramatically reduce the marketing spend on Cheerful and to reallocate resources to focus on the marketing on Bosch. This is expected to lead in anticipated growth in volume of 15% per annum for Bosch and flat sales for Cheerful. The target operating profit for B-Land operation in 2 years' time is set at 135 million, and the board. For your final task, the board has asked you to evaluate whether the two proposed marketing strategies result in B-Land hitting its operating profit in 2 years' time. So, what do they want? They want to actually increase the operating profit in 2 years' time to be 135 million. Now, one of the strategies is to continue operation at present, allowing for a 4% growth per annum in volumes of both Cheerful and Bosch. So what is actually going to happen? Let's just try this. The combined profit right now is what? Is this plus this, 87 point. Part B, if existing strategy is followed. If existing strategy is followed. So what's going to happen is that this is Cheerful, this is Bosch, and this is combined, right? So what's going to happen? The contribution per unit right now, the contribution per unit is this. The contribution per unit is this. Number of units is this. And the number of units is this. So we've got the total contribution less fixed cost. Net profit. Now let's talk about the fixed cost. This is what the combined profit is, right? Now, what are we expecting? The number of units are going to be after 2 years. Okay, now see what's going to happen. This is going to be multiply 1.04 power 2. Why 2? Because we're expecting it's going to increase by 4% per annum. This is going to be into 1.04 power 2. Hence, the combined result for the profit after 2 years is going to be this plus this 114.116. And it should have been 135 million. That's a problem. Second strategy. For the second strategy, what's going to happen? Okay, the second strategy is going to be, you would say that this number of units has to uh, one point zero. The marketing spend is going to be reduced. And what's going to happen is that on this, you would have a 15% increase every year. The marketing spend is going to be allocated in here. Hence, you'd be able to reach 140 million as a combined profit. See, if a strategy, second strategy is adopted, this is what is going to happen. Yeah, do you people get it? So the second strategy is going to work out because you were targeting that we should be able to reach 130 million. Okay, let me just see. Yeah. So targeting, this is what we should be able to reach, and this is what you'll be able to reach. Okay, so the examiner was asking for this, that what do you suggest? The two proposed marketing strategy, they wanted to see that evaluate whether they would result in hitting the operating profit. Yes, the second strategy would help you achieve the operating profit target which you are trying to achieve, because that's what is going to happen after 2 years. So after 2 years, situation is here with respect to the second strategy, right? Okay. So that marks the end of the question, Lofton. I know that this had a lot of calculations, but again, this is part and parcel of the APM that you can get calculations also, right? So be ready for that, be prepared for that. Yeah, hello. Where are you people? Are you people sleeping or what? Okay, so we are done with this specific question also. And I hope that you people would have been able to understand that how do things go about. So that's it for today. That's it for today. We'll continue in the next session, and I'll continue doing another question. I'll just share the recordings for this class, inshallah, with you people, so that you people have an idea that how do we go about doing them, right? So that you could have an idea on the APM revision sessions. This was about Lupton and Master. Right? Okay. Yeah, it will be shared in the group. Don't worry.